Hello and welcome to Sectors Up Close. I'm Ramzan Karmali. Today we're looking at the non-alcoholic beverages sector, and my guest is Amy Kong, partner and investment leader at Corient. The non-alcoholic beverage sector includes everything from coffee and tea to soft drinks. The two biggest companies involved by some distance are Coca-Cola and Pepsi. Both companies have a market cap worth well over $250 billion each. In fact, Warren Buffett, perhaps one of the most significant investors of all time, once said he would never sell his equity ownership in Coca-Cola. He bought shares back in 1988 and continued to grow his investment, with Berkshire Hathaway now owning over 9% of the business. But this year so far, in the US in particular, non-alcoholic beverage makers have underperformed the market. Shares in Coca-Cola have actually fallen this year, while the main S&P index has surged ahead. So, has the fizz gone out of the sector, or is now the time to invest in non-alcoholic beverages? Well, to help answer those questions, I'm joined by Amy Kong, partner and investment leader at Corient. Amy, thanks so much for joining us. Well, let's start with that obvious question. Why has the sector performed so badly this year?
Hi, Ramzan. Thanks for having me. You're right. The sector has not performed well in 23, but it is taking a breather from 22, where it significantly outperformed the S&P 500. And don't forget, the market momentum or the rally, as we've seen, it has shifted a little bit towards tech. In particular, companies that have more growth potential. And I think that's also taking a little bit of momentum away from, again, the staples sector.
You talked there about growth, and 2023 has been all about growth, to be honest. Investors probably will see the sector as kind of a defensive play. So why should they get involved right now?
Sure. So the earnings potential for consumer staples has actually been okay. And I think it does still warrant a position in client portfolios. Why the sector has underperformed this year is really because pricing power has been the tailwind here and has been supporting EPS growth. Investors, myself included, are starting to wonder how much more pricing power can there be? How much can these companies continue to pass on to the consumer? And where's volume? Volume growth has actually been muted as we are now exiting the pandemic. And so that's the question that I think has been hovering around the sector.
One possible cloud on the horizon for this sector is the decision by the World Health Organization to classify aspartame as a carcinogen. How difficult is that for the sector?
It's certainly a headwind. It's obviously a headline headwind that investors, consumers will be very keen on. I think it might create some short-term noise for the sector or for the subsector, but longer term, I think it's important to realize that if there is such a labeling impact to take place, it's important to distinguish that designation is really to suggest that there's a possible link, and certainly it doesn't suggest that Diet Coke or soda in general is cancer driving. And so that's an important takeaway.
Turning to coffee now, and Starbucks this week revealed really good sales in China, but investors weren't that impressed by their third quarter sales. What's your take on Starbucks?
I think for Starbucks, the way they deliver their beverages is very important. And where I think it's a little bit different than Coke and Pepsi is that they can actually charge you by customizing your drink and have pricing power there, whereas Pepsi and Coca-Cola don't really have that tool in their toolbox. And that's a very important distinction. What I thought was also interesting is that they have, meaning Starbucks, has continued to gain from adding food to their ticket items as well. And I think that's an important aspect to keep in mind as we're going forward. Having that food/beverage combination, in our opinion, is an interesting one and an attractive one. And so between Coke and Pepsi, as an example, we do tend to like the Pepsi story a little bit better.
And finally, Warren Buffett, I mentioned at the top of the programme, he said he'll never sell his stake in Coca-Cola. Do you think he'll ever go back on his word?
I don't think he'll sell. Mr. Buffett has been drinking Coca-Cola since he's 5 years old, from what I gather, and I think that's likely to not change going forward. I think this is an interesting space to have in, again, client portfolios. It's a nice hedge against some of the very higher growth stories, low dividend paying stories. I think the dividend yield and the dividend payout for these names continue to be very strong relative to the broader market. And again, it's a nice hedge against some of the growthier aspects of a portfolio. So I would definitely be a buyer of these names, meaning I would have these names in our client portfolios and make sure that it does play a complementary role to some of the edgier or more growthier parts of the client portfolio.
Amy Kong, partner and lead advisor at Corient, many thanks for that. And that is your roundup of the non-alcoholic beverages sector. I'm Ramzan Karamali, and this is Reuters.